For my project, I chose to research the BlackRock Coffee Bar company. They are a chain of drive-through coffee bars that originated in 2008 in Oregon. They currently have 158 locations, but they do plan to grow exponentially by the year 2032 with 1,000 locations. They made their IPO, their initial public offering, this year, September 12th, so very recently. And they started trading at $20 a share. Within the first day, they were up over 30%. I think it was 33%. So they did fairly well. They did start trading on the NASDAQ, which my research shows that it's very growth friendly. It's got a big pool of investors and maybe easier rules, but still very credible. Then there's the New York Stock Exchange, which leans more towards household names and common stocks and ETPs. I also did research on the Hong Kong Exchange, the HKEX, which is the leader in the markets right now, more for Asia-facing countries or companies. For the macroeconomic environment, the outside sources that may affect companies like BlackRock Coffee Bar, I believe when rates fall and growth looks a little clearer, IPOs will thrive. And when rates rise and inflation sticks around, they usually dry up. It's just simple as that. For the politics and society, obviously U.S. labor wages pressures hit margins, but competitor pullback leaves space for drive-through chains like BlackRock Coffee Bar. Coffee supply usually right now comes from Brazil and Vietnam, so prices are a little volatile, but I feel they're doing fairly well for themselves. For oversight in governments, there's obviously standards that these companies have to adhere to. Proper audits, independent boards, ongoing compliance, higher tiers, which would be have more investor trust, but also more cost. You've got enforcers like the SEC, the PCAOB, auditors, NASDAQ itself. This makes compliance costs high, but it keeps capital costs lower and investor trust higher when they adhere to these rules, obviously, these standards. Commodities like coffee, I researched a little bit of the foreign exchange and how that's affecting it and everything. Dollar pricing, like U.S. listing reduces the foreign exchange noise. That means if a company lists its stock in the U.S. And prices it in the U.S. dollars, then investors don't have to worry about fluctuations between the dollar and another currency. This reflects the company's performance without much extra noise from exchange rate swings. UK listing adds the GBP and the USD layer. If the same company lists its shares in the UK, then the shares are priced in British pounds. For a US-based company, this means investors now have to factor in extra conversion between pounds and dollars. Changes in that rate can make the stock appear to move even if the underlying business hasn't changed. So there's more foreign exchange noise. This means pretty much that the U.S. Listings, a U.S. listing smooths things out by sticking to the dollar, while the U.K. Listing makes the stock price sensitive to the pound-dollar exchange rate. So I did research on the risk and returns. Stocks, U.S. investors, they chase growth. Higher upside, more validity, while U.K. focused more on dividends and stability, which I found very interesting. In the U.S. bonds, U.S. cuts help valuations. UK bonds are more tied to political choices. So the U.S. Gives better valuations for companies, but requires careful timing of when those companies enter the markets. So low validity helps. In conclusion, I think that BlackRock Coffee Bar made the right decision making their IPO on the NASDAQ. I think it's best. I think it has the best investor base for growth. I think it fits the macroeconomic climate. Rates are easing. Equity want is back. And I think it was the obvious choice for a U.S.-based coffee chain like BlackRock Coffee Bar. London and other exchanges, they have their pros and their cons, but I think they maximize their momentum, and I think it fits the investor profile going forward in the U.S.